The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I hope everyone had a nice holiday. We certainly had some wild markets, and I want to start out with silver. By the way, if you get a chance tomorrow, well, the whole week, we've got Shane Smolian's going to be on tomorrow. He just finished his 26-page newsletter. He has a really strong, some very strong opinions and some really great data to share with us tomorrow at 9:30. On Thursday, we're going to have Norm Winsky on from Astro Trend, and on Friday, we will have Rich Anderson on from Anderson Capital Management. But let's just get to the markets here. I'm going to cover silver, and then we'll go through the importance of this July 5th date as I see it, and we'll see whether it means much or not. First of all, if you'll notice, silver opened slightly lower Sunday night, and then quickly rallied $7,000, $1.50. It was actually $7,500, $1.50. It then dropped $5,000. Then it went up $2,500. Then it came down $3,500. This is, folks, in a matter of a few hours. That low that we made at the $3,500 level was a perfect 1.27 expansion off the previous swing between down 5,000 and up 2,500. As you can see from this chart, we did finally get a perfect Gartley. And this is a 4-minute chart, folks. The reason why I saved this for you is twofold, just to show you how wild it was. And the second reason is to reinforce that these patterns work best when the markets are really crazy. So this is why I'm doing it. But we've had a move of over $20,000 easily in silver over the past 36 hours of trading. Much of this was started in Shanghai, because it's a very big area for speculation in silver and gold, more silver than gold. Why, I don't know, but they're both pretty heavy. But the next chart that I wanted to show you is what happened. There's two of them here. I want to go through the sequence because this is how you determine whether something really significant is happening. And I don't think anyone would argue the fact that something is certainly significant with this kind of a move. I mean, this doesn't happen normally. Now you'll notice that we've completed that Gartley that we had there at 20 per ounce. We rallied all the way up to 2090, which was just a tad higher than the 61% retracement. And then we completed the very first large ABCD pattern from up 7,000, down 3,500, and then down another 5,000 from the high. That completed a perfect ABCD pattern. And this is what we're looking at now, is because once this pattern completes like this, it gives us a pretty good idea of what should happen next. And so what we're going to do, and folks, I followed this the whole time. It was so interesting to me that I thought that it would be a good teaching vehicle, and also give us some more information about where we're going with silver. But if you'll take a look at this next one, you'll notice that after we made that ABCD to the downside, we made a 38% rally off of that high from mid-morning in Shanghai time. And since that time, we've come down and tested that low again, which tells us that we most probably have made some type of a significant top in silver. I know that sounds a little bit cliche, but when you have a market that swings that much, somebody's out there with a big stick, and one of them is going to get hit in the head with it. That's all I know, and it's usually not the little guy that's in there rocking and rolling during times like this. The gold market was entirely different. We did not take out the old high at the 1363 level. We got up to 1360, and gold is now down on the day a little bit. Remember, the new moon that we have is very important in the grains and silver, of course. So those are the things that you want to keep in mind to look at it. Now, I wanted to share with you one quick pattern, and then this happened on the right after the morning of the 4th of July, and this was in the S&P, just looking at it on a 30-minute basis. I happen to know some people that were involved in this one because it was a perfect butterfly up there at that 2103 and change level, and since then we've come off about 20 handles so far. So we've got a pretty big cycle date that we're looking at here, and I wanted to go into this. This is going to be not a quick and dirty, but I'm going to try to explain to where some of this stuff really comes from, and then you can make up your own mind. But I would really, I'd highly recommend to ask Shane Smillian from wolftrader.net for his newsletter. I'm sure he'll send it out. Well, I'm not sure, but I'm pretty sure, because it's a really a work of art. It's one of the better letters I've seen ever. And it is rather long, but it goes over some of these things. And I'm going to do it a little bit differently, of course. But the first one I want to show you here is if we go back in time, and this is how I studied astrology with Dr. Miller, is that we would go back and pick a date where something really big happened in the stock market by looking at the charts, and then we would look at the transit charts to see if there was anything happening, in the sky that would make us believe that, yes, something really important happened here. This is one of the most important days in the history of the United States stock market. It was July 5th, 1932. As you recall, the market had come down from September the 3rd, 1929, when it was 383. It now bottomed at 41 on July the 5th, 1932. And from there, we went above 18,000 over the next 80 years. So it's been a pretty big run. What I'd like for you to see here is how most of the planets are lined up on one side. You'll notice there's all kinds of spaces in many of the houses. This means that all these things are lining up together. So that's why it's very important. Now, if you take a look at this of what happened on March the 9th of 2009, you're going to see the same thing, only even more dramatic, because all of the planets are lined up in two houses. So basically, one house and in Pisces, and so you'll see this that all lined up, how all of it lined up together. Now, what we did is that we went and looked at all of these, not just 1932, but we looked at 1974, both of those in October and December of that year. We looked at 1981, 1982, all of these major spots that we hit to see if these transit things sort of help us, tell us where we are with the cycles, and that's what we're really trying to do. If we go to the major cycle high in the stock market of 2000, March 24th, you're going to see this is when the NASDAQ made its high. The Dow had already topped in January, but the NASDAQ topped, yes, that was July the 5th, 1932, Mr. Z. Okay, we'll be right back after these few words.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're talking about the transit charts of the stock market. I've posted the one from March the 24th, 2000. That was the high in the NASDAQ. The Dow had topped in January of that year. And as you recall, the NASDAQ gave about 85% of its value back between 2000 and 2003 when it finally bottomed before going up and making a double top and actually, I think, taking it out by just a little bit. But these things that you're looking at, folks, I know they look a little crazy and probably a little bit esoteric to most people as they do to me, but they're really nothing more than cycle days. That's really what you're looking at. What it's doing is it's showing you too in a graphic format so that you can see where these things are lined up within the zodiac. And the zodiac is, very important. It's been around for, it's just 7,000-8,000 years. That's one of the main things that these folks looked at, way back in ancient Egypt and Babylonia and Samaria and places like that. So I don't know the meaning of it, but all I know is when you look at these numbers, they're truly amazing. And when you put the Fibonacci numbers in with them, it really explains why things hit certain levels so significantly. Now the next one that I wanted to show you is going to be a very interesting one because this is where we are right now. And you're going to see a chart that has really got a lot of stuff in it, folks. You'll notice all the line. This looks like something that Mr. Trump would probably use against Hillary Clinton with all the different stars and patterns that are in here. But you'll notice how so many things are happening. Now, this is incredibly unusual. This is you just don't see this very often. But anyway, you'll notice how all these things are in the middle of a page. You'll notice the little red circles in the middle. Those are conjunctions and oppositions. That's at 0 degree and at 180 degrees. You'll see the little squares. Those are 90 degrees. You see the little triangles. Those are known as trines. Those are either 120 or 180. So you'll notice that all these are working together. Now, how this works, the way it was described to me by Dr. Miller, is that this thing is like a clock. And as the clock moves from hand to hand, it locks into certain of these patterns. What this is saying now, that many, many things are happening in the financial markets. That's what it's telling us by looking at this. And if you look at the action that we're seeing in silver last night with over $23,000 in swings, you'll basically you'll see that that's what it is. A transit chart is nothing more than the transit is where a transit is defined as where an angle where two planets come together. Like if they're at 0 degrees, they're at conjunction. They're next to each other. If it's on the other side of the thing, they're at 180 degrees, and that is opposition. Those are the strongest. The second strongest, of course, are the trines and the squares. But each of them have weights. This was done by Yale University many years ago. And this is how the Bradley model it was devised. This is what Bradley did, is to look at it that way, and that's how he did it. Now, if we take a look at what's happening with the Bradley model as we come in today, you'll notice you're going to see this. You're going to see this date. It's not going to have the same type of importance when you look at the Bradley model here, but you'll notice between where we are now, around July the 5th to almost, Thanksgiving, there's a very strong possibility that we're going to be in a strong trending market, much like we did from October through January. And so this is where the Bradley model is usually the best, and it comes very, very close to the dates. And the second thing that it's good at, it's very good at picking trends where they go down for, several months. Now, you'll notice when we made that bottom in March, there was a pretty good bottom in there, but, there was really no down move between May and June. There was a very, very small ABCD pattern, and that was it. Now, this is a much longer time frame. This is one of the longer time frames that you'll see on a Bradley model, where it goes down from July, August, September, October, and November. You're talking 5 months of potential strong trending to the downside. Now, this could flip over. And if we make new highs in the Dow, this would certainly be inverted, and we're probably going to go into Camelot, and everybody's going to get, tax-free income for the rest of their life, and we're all going to live happily ever after, and the United States and Britain will join together to form one unity again, like they tried to do before 1776. And if you believe that, I still have 2 shares of the Brooklyn Bridge available for your purchase. Okay, let's go to where the real action is happening, folks, and that is in the bond market. We're going to start across the pond. As you know, we've made new highs in the 30-year bond. They've had a $6,500 move so far last night. Or the last 36 hours. The German bond, which is equivalent to the 30-year bond, you'll notice that it went up and hit the exact 61% retracement of the move after the Brexit thing. It did not even get above that. It's still below it. And so that is telling us that there's a little bit of selling coming in. It is totally startling to me, folks, why people will buy bonds when you have to pay them to buy the bond, and that negative interest rate, and that's exactly what people do. That has got to be one of the most insane things that if a person would just stop and think about. Let me ask you a question. Anybody in here want to, if you pay me $50, I'll handle your money for you. I mean, what kind of person would do something with negative interest rates? And one of the explanations that I got was from Rich Anderson over the weekend, and the fact is, they have no skin in the game, folks. It's not their money. The banks are the ones that are doing this. I mean, they are the ones that buy the bonds. Of course, these are not zero interest rates. It's very low at 2.1 as of today, but they certainly haven't reduced credit card interest rates from 14 to 24% on most people, or 8% or whatever it happens to be. But this is just not a very, very smart thing. This is going to go back into history books as looking at the greatest Ponzi scheme ever perpetrated on the public. But that's neither here nor there. Right now, I'm Barry's bonds, and I'm flat out wrong. But we'll see what happens from this level. So that's what's happening, with the German bond over. Now we made a higher high in the Treasury bonds themselves. The Treasury notes, they have not made higher highs. They are still below the highs that we made during the Brexit thing. And also the same thing is true of the shorter term rate also. So it's only the 30-year bond that has gone up and made new highs. And it is, there's a possibility, I suppose, with another type of a Brexit type strategy thing, that we'd be looking at a market that might go all the way down, even a whole lot lower. But we hit a major 1.27 expansion up there at that time when we got to 176 in the bonds. And here again, we've had some wild swings in bonds. I mean, bonds is a huge market. It's hundreds of times bigger than the silver market, but we had a $3,000 move up in bonds, a $2,000 move down in bonds, and a $1,500 move up in bonds. That's just in the last 24 hours. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart for crude oil. We've been talking about this for a few days. We're now at the proverbial moment of truth. As you can see, we have a Gartley pattern forming here at the 47.40 per barrel level. I wouldn't have to risk much here, folks. I would think 40 pips would be enough because these numbers are pretty accurate. As you can see, the high that we made over the weekend, I believe it was on Sunday night, was a 61% retracement. That yields this ABCD pattern that we're seeing now here in the crude oil. So pay attention to that. If you're bullish crude, here's a good place to take a look at it. If you're really risk averse, I wouldn't risk more than 40 pips on this. If you want to take more risk, then maybe you could go below the 786, but I don't recommend that. These numbers are pretty accurate when they hit, and we're spot on, where we are at this particular time. Watching it very, very closely. Now, I wanted to re-examine something here in the S&P because it's very important. We get this from our good friend Norm Winsky. You'll notice on the 4th of July at early in the morning, around 8 o'clock in the morning, within 15 minutes of the exact high is when the new moon hit. And since that time, we've sold off quite a bit. Now, if we go above that high, at 2103, then this market is going to go a great deal higher. But right now, this is what it looks like. At least they're starting to, line up the way we would think it would be, given the fact that this is such a wild day in the markets. I wanted to show a couple other things relating to the gold because I'm very, very bullish long-term gold and silver, but I believe we're due for a pretty good correction for two reasons. The main reason is the fact that this volatility that we had in silver is almost unprecedented. I can only remember back in April of 2011, we had some action like this, but not nearly as much. I think it was about half as volatile, but that also marked the high day, which was also a new moon. So these lunar things are probably kicking in, but it's not just the lunar things. There's just a lot of cycle things happening, as we've seen on this July 5th, 2016 transit chart. And then Shane Smullian from wolftrader.net will have some really good information on this stuff also. But let's take a look here quickly at the XAU, which is the gold silver index. Now, this is probably going to open, I would imagine, slightly higher to maybe even lower, depending upon what's happening here. And you'll see, I don't know where it opened yet, but that's a 1.618 expansion up there in the XAU. If we take a look at the major gold stocks that we're looking at, the first one we'll look at is American Barrick, and you'll notice here that it is also at making a three-drive pattern up here, taking out the highs, from 2014. And then if we take a look, of course, at the Newmont Mining on the long-term basis, you'll see that it is at a 38% retracement. We're just very, very overbought in these, and I think they're ready for, and I'm thinking as an opinion here, which, we know what that means. So keep in mind that this is long-term bullish. Short-term, we should have a pretty good correction in some of these things, and we'll see what's going to happen with these. Anyway, that's what we're looking at, and we'll watch these markets as we first start to open here. And we're down just a little bit in the stocks. We're down about 20 handles from the high. The gold is up a little bit on the day, a couple of dollars, and of course, we've got the silver is still up a little bit also, but down $1.50 from its high, which is a tremendous amount. Folks, that market in Shanghai is a very, very active market. And believe me, it does a lot of volume. If I happened to be watching this last night, because when silver opened lower and I had a limit that ticked, once it went above $20 an ounce, believe me, it took off like a little rabbit being chased by a fox. And the real key to it was when the silver hit 2080, it went from 2080 an ounce to 2125 an ounce in a matter of seconds. And if you had blinked your eye, it was back down below 2080 in just a heartbeat. And that's when the correction started, where we dropped to almost $2 an ounce down to the 1960, well, dollar an ounce, down to the 1960 level, and then it is held there. That was the major ABCD at that 1960. If silver is still bullish, it's not going to get below 1960 today, and we'll see what's happening. One of the questions someone asks is, what would I risk if I were to buy crude oil at that 47.40 level? The amount, it's very small because, it's a very orderly market. We don't have any really strong, wide-ranging bars down. We don't have any gaps present. So if you believe 618 is going to hold, and that's what your belief system is, you don't have to risk very much. You can become an oil man for $400. You don't have to have a well and a rig and all the other stuff or distribution. You can literally do what we're doing here in some of these other things. Now, one of the other markets that we're going to look at this week, especially during the week, will be the market for wheat and corn. And I think we're getting very, very close to really strong buys in both wheat and corn. Corn has made new lows on the year now, as I recall. Let's just double check this to make sure that that's correct. Yes, we've made new lows in corn, and we've made new lows in wheat. And so I would be ready looking to buy these, and all I'm waiting for is to see some type of a place where they will hold in a reversal pattern where they would close higher on the day would be the first sign. Now, the lunar things in wheat and corn are some of the very best. These are the oldest of the technical signals that we get from technical analysis. This work was done by Dr. Andrew Lowe in his book about 10 years ago called The Evolution of Technical Analysis. And he said that the first technicians were astrologers, and the thing that they used was Mercury and also the lunar cycles, including the eclipses. And we are over some really heavy stuff astrologically, as we've talked about, including the new moon. So this would be the time that you would want to be looking to buy both wheat and corn. So keep a close eye on that. The soybeans have held up much, much better. They're in the midst of a very tricky weather market because it gets pretty sloppy. We're down quite a bit today, about 40 cents, because the weather held up. We hit a perfect 78% retracement on the November beans up there at that 1160 level. And then since that time, we've sold off about 60 cents a bushel from that level. But longer term, I still think they look okay. The easier ones to look at are the corn and the wheat. I'm going to wait until tomorrow, mainly because of this big move that we're having in everything. It tells me that these cycles are certainly coming into play. And how big they're going to be is going to be the $64 question here. 877-927-6648.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY or periodic rate of interest is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I posted the weekly chart for wheat going back the last 5 years. As you can see, we're making new lows here. Folks, the world's not going to stop eating bread, at least not in this household. I mean, that's that's a staple pretty much. And so what we have is some increased supplies and also some competition from around the world, but that can dissipate quickly if the weather gets bad. So we want to be watching for a potential low here for two reasons. One, the pattern's completing, and of course that's the main thing. And the second thing is we do have these cycles that are forming that will affect wheat also. The cycles that we looked at for July 5th will affect everything. We've seen it so far in bonds and silver and some of the other things that we're looking at, but this should affect everything. But you must wait for a reversal because you just can't, put a falling knife in there and see if that's if it's going to stick in the ground or stick in your thigh. Either way, it's not a good thing. So we want to, pay particular attention to that. Now, something very significant happened also in the foreign currency markets. As you know, I've been following this British pound for quite some time here. Give me 1 second here. I've got to get the correct chart up. Oh, this is what I hate, is when I have this all ready to go and then bada bing, bada boom, it hides from me. And I do not like that, but unfortunately, that's the way it is sometimes. And we might have to go to plan B. And I'm pretty sure that's what we're going to be doing is, no, I got it. Here we go. All right, here is the chart for the British pound. As you can see here, into the Brexit meeting, we had two targets. One was at 150. As you can see, we're in a tremendous downtrend here over the past 18 months. And we were making the same correction that we were during 2015, just a tad at the 50% relationship at the 150 level. And since we've come down and we've broken, and now what we've done is we have taken out that 1.618 number that we had at 131.12. We rallied about 90 pips last night after taking that out, and since we've gone down and we're trading below the 137 and 130.80 level now. So this is still, in a drastic downtrend given this move down. So the Brexit thing is still on everybody's lips. You hear some people think it's the greatest thing in the world, and then you hear like Mark Faber from Gloom and Doom Report, and then you listen to George Soros and some of the other people thinking, like Alan Greenspan, they think it's the worst thing that's happened since the bombing of Berlin in 1938. So who doesn't? You just have to look at the charts and see what's going on, and we'll see what happens over a long period of time. They're not going anywhere. That Britain's not going to close up shop. So just remember that all this news will be dissipated, just like it was in Greece and all the other things. But there's the thing that you have to worry. I know it's silly for me to say this, but the thing you have to worry about is this zero interest rate. This what's happening with what the Federal Reserve is doing, and also not just our Federal Reserve, but the Federal Reserve, all across the world is doing exactly the same thing, that they're looking at these markets with negative interest rates, that it's a normal thing. And this is a giant experiment that's going to end, very, very badly. One of the questions that someone's asked is, where would the first support be here in the S&P? And it's going to be down quite a bit, I would think, because, we were straight up from the Brexit thing in 1979. We went all the way up over 100 points, and the 38% retracement on that is all the way down another 20 points from where we are right now. So that's a key thing to be watching. So that's what I would be looking at as far as the first support. In fact, if you were looking at it, I would try to find a place where you would get a nice ABCD pattern on the upside to possibly be a seller. So we'll keep an eye on this. But we're considering the action that we're having in silver today. These markets are incredibly quiet all across the board. Even the Australian dollar last night had a minor rally into the 61% retracement, and then of course their news came out that they were having some trouble with some balance of payments or some type of a thing. I don't know which one of the fundamentals report it was, and then the market, quickly sold off 100 pips. But given the fact that all these markets are interrelated somewhat, you want to be careful that they can move a great deal. But I don't know when this bond market's going to be over, but boy, when it's over, it's going to cause lots of problems. There is a really great video out there from a man named Simon Black that describes this zero interest rate to what happened in the subprime, because the principles are the same thing. With the subprime, they were just giving money, freely to everyone. They didn't even have to, basically had to apply is to have a heartbeat and a fingerprint, and you got a thing. And the same thing is going on now. These countries that couldn't get, money before, Spain and Italy and some of these that are at negative interest rates. I mean, they have virtually no credit rating, and yet people are still, paying them to lend money to them. That just doesn't make any sense. But the amount of this negative interest rates is, I believe, $13 trillion, as opposed to the $1.2 trillion that was going on with the subprime mortgage. So you can imagine what this might be. Maybe this is the canary in the wool, in the coal mine, or the proverbial black swan. I don't know, but just think about it, folks. It just doesn't make any sense that you would pay someone to let you lend money to them. That doesn't make any sense to me at all. But that's neither here nor there. Okay, we've had a question about the cattle market. Cattle they're down quite a bit today. Remember, we had Rich Anderson on the tube. He thought that there would be pretty good support between 110 and 108 in October cattle, and we did hold that. We rallied about 4 cents, and now we're heading down. It appears to be that there's going to be a commodity sell-off here, not counting silver and gold, of course. but the grains are certainly getting hit today, and so are the meat markets. But those are very small markets, compared to some of the other markets that we look at, like foreign currency and treasury bonds and treasury notes. That's those are the things that we're sort of keeping a close eye on. Keep in mind, folks, that this long-term chart that I'm going to put up here for my good friend Jim Bartolioni is still in play. This is the long-term New York Stock Exchange weekly pattern. As you can see, we're still in this zone here where we're looking exactly like we were in 2007. We've just been here a little bit longer, and I believe it's probably caused by, quantitative easing or whatever you might want to call it, but that's neither here nor there. We will have Shane on tomorrow from wolftrader.net explaining to us about the effects of this quantitative easing and how the Fed pumps money into this, because he feels very strongly that those days are numbered, if not over altogether. So we'll see. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to wind up the show here today with the chart, the transit chart of the today, which is July 5th. This is the anniversary date of the low in the stock market in 1932, July 5th, when the Dow hit 41. This is a very unusual chart, as you can see, because of all the transits that are hitting. This just means that there are a lot of cycles being hit everywhere today. And as this clock starts to move over the next few days, it'll give us some more information. But right now, it's telling us that there's a lot of things happening, and we're seeing some very unusual volatility, in some of the currencies like the British pound, of course, but also we're seeing it in the metals market, in silver, and a little bit in gold, and we're seeing some really big sell-offs in wheat and soybeans, and also the cattle markets, and these could be related to possible deflation down the road. So we'll know. You're going to hear a lot of different stories about this Brexit stuff. I don't understand it, but I think even the people that are talking about it doesn't even understand it too much. The question that someone's asked: does Jim have a Jim Bartley only have a lower low for the British pound? Once you go beyond the 1.618 level that we did at 131.20, there's really nothing else that we can look at. And so what I would be, he's looking for a 0.88. It's right now it's at about 0.80, so it would be probably about 129 would be my first guess. It's trading at 130.50 right now, so 129 would be the most probable place to look at it. We did rally as high as 133.50, which was a really nice Gartley pattern on the half-hour charts over the weekend. So we'll get some pretty good stuff going, through this area right here. But we're going to see some increased volatility here. When you see something like what happened in silver, you can imagine if that ever happened to the stock market, the folks. And this used to be the case in the stock market. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.